All right. All right. Let's get to it. So, plays for the week. Things I have my eyes on. Like always, let me say it before, this is not financial advice. These are ideas that I have been looking at and I'm trading. So if you want to follow along, of course, follow along at your own risk. But I mean, I'm queen, so they are perfect setups, in my opinion. Anywho, the first one is a cheapie. You know, I love these cheapies. This is what I'm seeing. This is, yes, in a somewhat of a downtrend, of course. But I'm expecting it's already been past earnings. It's already been past dividends, which came out in August. We're, new month. I think that this will, hold very, very well. So right now, all I'm doing is putting in key levels or key pivot points that I see. That's it. Like, don't make this difficult when it even comes to charting. You don't have to make it where you're charting all day long. Just chart the pivot points, chart the areas that it spiked up to and it rejected it. It spiked up to and it rejected it. That's what you would like to see. Now, with this first top pivot point, there are already 3 taps here. So this has already built a lot of consolidation, momentum, whatever you want to call it. It's built it. And now, I'm looking for that retest of it and possibly a break through it. So for SIRI, I am looking at December calls for $3. When I looked at them Friday, they were 23 cents. I'm hoping that this drops a bit more and I could still get them at 23 cents because I made no purchases Friday, but I will be getting this option providing it stays under $25. So if it is already Monday at $25, I'm not playing it. If it stays under $25, I will take this trade. So it could be Monday 24 and I will take this trade. It could be Monday 19 and I will still take this trade. I'm just not going to pay no more than $25 for this trade. So right now that is SIR $3 calls for December 20th of this year. And as you can see, like always, we'll put these key levels in. So we have them labeled, take a screenshot if you want. The levels are here. I'm doing the work for you. All right. So here is my bias on SIRI. I like it bullish, at least by the end of the year. Next one. It's going to be puts. So this one is another cheapie. Right on Friday when I looked at them, these were 28 cents. The stock that we are looking at is XLE on the daily time frame. Everything is charted right now on the daily time frame just because it's just a little bit easier. But you can take it down to any time frame that you want. Being that these are the 20th, I'm looking to get them Monday, and I'm probably not going to get out of them until like the 19th, well, providing, they make money. The key levels that I'm seeing here is going to be right here. Now you could put this key level for the top. You could put it here or you could put it here. It doesn't really matter. They are literally key levels. This is where it took a big dump after it, hit it. But I'm really just playing right here. And the reason why I'm playing just right there, this is more of a shorter term play, being that I only really have 2 weeks on it. It's $28. So I'm willing to risk that. I will not go over $28 on this contract. So if Monday opens and this is at 30, it is a dead play. I don't think that it'll be a dead play because it kind of consolidated it towards the end of the day. where that contract shouldn't have lost much. I just need to make sure that it doesn't fall more, pre-market. And then these should be still in play. And the play is going to be the 81 puts for September 20th. 28 cents is the max I'm willing to spend for them. So there is another play. And we got 5 today. So let's see. Our next one. Don't know the price on this. Let me look up the price on these paths, because this actually might not be a play, especially being that I don't have the price on it. Okay, I do have the price. 65 cents. So let's put that in there. So that we have it. All right. So PATH. What I'm looking for next year, these are cheapies. This is one that I'm not going to spend more than $70 on it. 65 when I looked at it, but $70 is my max that I'm willing to pay for this contract. We won't chase contracts. We just don't do that. So let's do our pivots. Pivot here. All right, let's get that line out of there. Let's get pivot points. Let's have this labeled. So we got a pivot point here. We have a pivot point up here for sure. And we got one here. All right. That's pretty clean. So I'm very bullish on this, but I do want that bullishness with time. February of next year, $65 to hold on to a trade for a few months doesn't seem like it's a big deal, especially when this could pay very well. It did have a ranging day Friday, but it ended fairly bullish. That candle, that last candle is an engulfing candle. It engulfed pretty much all of that. And it's sitting upward, so I'm looking for it to take out that $20 level, which is 2092 to be exact. But I'm only looking for it really to fill this gap area, so this is a pretty much clean trade because you have a nice gap right here. And unless this rejects, and let me get this gap lined up perfectly for whomever is charting it. Unless this rejects the 50% of this gap, so when I say rejects, this is what I'm meaning. It comes up, rejects that 50%, comes back down, and then hits this level. Okay, that could so happen, of course, because it's nowhere near this. But we know that trading gaps, what we're looking for is a break through the 50%. Our first target would be there. So that's what we're looking for. That, at least that's what I'm expecting. Okay. So the trade that we're looking for is going to be $16 calls for February 21st of next year. $65 was the price on Friday. The max that I'm willing to pay is $70. So that is that play. All right, we got a little chop fest on this one. Very, very sporadic up and down movement. But I mean, overall, this one is a bit more pricier. You know, some people might not want to pay this much for a contract, but this contract it expires in 3 weeks. So there's really no risk that much for it because you have time. I don't think it's going to go against you at all, of course, because I charted it. So not betting for it to go against me. And the stock is going to be MRVL. They do have earnings coming up, so this is one of the more riskier plays. Play at your own risk on this one. Earnings are going to be they're actually past earnings. I apologize. They had earnings on the 29th, and it looks like they had really, really good earnings. That's why you have that nice little spike here. So earnings is behind them. They had good earnings. You're looking for that surge, play to the upside, and or the surge to the downside. Being that I like puts, I'm looking for to the downside because it had its chance to take out this 85.72 mark, even with earnings or good earnings. I don't know how good they beat earnings because I didn't read the report, but they had a chance to take that on and they did it. And it fell days after, 4 days straight, it has fell from earnings. So being that it didn't have the momentum to break highs, I'm looking at puts, $62 puts for September 20th, which is about 2 weeks out. At the time that I looked at them, they were $115. The most that I'm willing to pay for these contracts is $120. If it is gone past 120, I will not take it. The price target I'm looking for on this one is going to be 53.10. So this one can pay out pretty well. Of course, it costs a little bit more money. So yes, the payout will be a lot, different. But if you can catch this, it's looking like it's just a falling knife. No gaps really need to be filled. There is a small level here between this blue candle and this white candle, but it looks like it's taking that out or trying to take it out. So definitely a continuation to the downside. $53 would be my target on this one. And last but not least, we have DELL. Let's see what we got. Let's chart this up. DELL is another one that is a little bit pricier. It's not much, but a little pricier. So, I mean, if you can't afford it, don't sit there and go and chase it. There'll always be a play. But let's take out our key levels. All right. So we got one key level there. The next important key level is here. Now you can go and, if you want it, chart more key levels. There would be one here. There would be one here. And there would even be one here. But to me, that is just too messy. So I don't want I want the main important levels. So the main important levels are going to be these two that I just put in because it's a little bit more cleaner, All right. So what I'm looking at for DELL is going to be 111 calls for September 20th. At the time that I looked at them, they were $170. The most that I'm willing to spend on them is $180. So I'm not going to spend more than $180. But it's closed fairly low Friday. So I'm expecting these contracts to probably be 150 on Monday, which means I'm definitely going to be buying in on them. Even if it falls a bit more, I don't think it will. I'm still going to take these up. I'm very, very bullish on this. I like this move of down pull up, pull back, and then take off. And the reason why I like that is because we had the downtrend. It broke out of the downtrend, right? So we'll just put this line about here, right? We got taps there. So downtrend, breaks out, comes back and retests that downtrend, right? Now we're in an uptrend. So it comes up, and I'm going to move that downtrend line so you don't see that anymore. It comes up, it comes back, rejects, a nice close. I'm looking for a bounce. So I'm looking for it to do something of this nature. Boom. That's what I'm looking for. And if I can get that, and it doesn't matter, if I only get a bit of it, if I can get that, I'd be happy with that. But target's 111. So we'll see what we get the next 2 weeks. So that is it to wrap it up. Those are my plays for the week that I have my eyes on, that I will be purchasing on Monday, providing they stay underneath the target prices that I want to pay for the contracts. And if these trades you've won on, please let me know. And if you are new to trading and need help, reach out to me, let me know. And like always, like, share, and subscribe. It just helps the algorithm, especially if these videos are helping you out in your trading or making you some money. It doesn't cost to hit that like button. It doesn't even cost to subscribe. All right. So have a good one and happy trading.